I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to Complete Trader Academy's daily review. Today is March 29, Wednesday, 2023. So this candle here opened up and started to consolidate and then shoot up, hit this 50% of that wick that I got drawn out on the 4-hour. You'll see, and then we took out the previous day's highs. All right, because they were sort of on the equal side, but let's go into a 1-hour real quick. Oh boy. So today's day. So Asia and London had pushed the price up all the way up here already. So we hit that 50% of that 4-hour wick, which is this big FOMC wick right there. All right, and then we chopped up, we came down, we swept up, and then we broke down and we came into this block on the 1-hour and on a 4-hour block as well, and a 15-minute block to be more specific. And then we rallied up the rest of the day, taking out that high of the day at 9 o'clock, and we're now here. So and then if it's going to stay bullish, obviously we'll hit this target here most likely, or at least 75% of this wick. So if this is 50%, this would be 75, which we are now. So it all depends how this reacts. Let me go into a let me go straight to a 5. I was gonna go to a 1, but you're not gonna see this. Actually, go to a 15 real quick. So on the 15, you'll see here that when we rallied up in London and we came back, sold for a target here to this support on the 1-hour 15, and then we also had this previous day gap, which was this gap right there, which is technically Wednesday's trading, but it happened on Tuesday at 6 p.m. open. So that gap held as support there with confluence of what we were looking at. Here's the 15-minute. You can see that this block right here, price came down to this block, held in this block on the 15, and then flew up. And then let me show you a 5-minute. You can't really see this here. I'm gonna have to go to a 1-minute, but yeah, let me just go to 1 minute. So we're here, okay, and here we go. So the time comes up 9 something, 9:30, shoots down. I'm letting it play, show its hand, created an imbalance, came down. Now this became an inversion imbalance because the imbalance right here, price went below it and came underneath and came right back to it, to the tick. See that? Oh my God, I wish they would stop doing that. See right here, this level to the right, you see this? This imbalance here was a bullish imbalance, and then price comes underneath it. That will act as an inversion imbalance. So how do you know it works? Well, because look at how it smacked the high of this imbalance. That's perfect algorithm delivery, and it hits it, and Jesus, and then comes down. Where is our target? I'd like to hit the bottom of this weekly open, or the daily gap on that day. We had some other ones here, and I thought it might go lower, but I'm taking 80% here, and then what happens is that we end up creating some structure. We make this high and then this low, and then we break above it. So when we had this break above it, that's a shift of structure. And where am I taking it to? Well, I'm gonna wait for some type of order flow. We had this low here, but it's not pretty. All these wicks here. Price comes up, comes right back down again. We have this imbalance here, which is more reasonable. But more specifically, I wait for it to hit one of these blocks well and take a look. Perfect. Look at the high of this candle. Look at the top screen. High of this candle is 32,551. What's the low of this candle? 32,551. So perfect. Smacks that 1 minute block. You're an immediate buyer right there. Push the button pretty much. And price comes up, comes back down. Respects that gap, respects that imbalance to the point. Look at that. Look at that. You see that? So that's what you want to see. And then price breaks up and goes, where are we taking it? We're taking it to this high to take out liquidity. And it was a rough day. I mean, to be honest, I took a loss here. So I got into this imbalance right here, and I got in when it tapped here. Now price came down, came back up, had my stop loss a little bit too tight, but that's okay because it was a small loss, and I'm okay with that. But then the price came up into this inversion imbalance, and then when I saw it tap perfectly, I'm pushing the button because that's too perfect. So that's showing what I'm looking for. Here was great. Took this was very clear and to the point, and held until this high. And when I got to this high, I took 80% from here. Still have a runner now, and I mean, it was a very, very tough day. Super sloppy, and here's the confluence of why I'm able to take those trades. The dollar was not really helpful at all. Very, very misleading. But what was very helpful was this. So when we had the divergence here first on Dow, and they had a higher high and they had a higher high, Nas and S&P, but Dow had a lower high. Now when we got down here, Dow made another divergence, which was great because it did not, S&P did not take out their low. Nas obviously didn't take out their low, but Dow took their low. So this was framing the buy here, and that turned out to be really gorgeous. But it was rough. This coming back down into, and you could have been a buyer here when it came back into this block. Could have been a buyer there. Could have been a buyer there. Could have been a buyer with this. Could have been a buyer when at 50% of this block. And you see the low, the low, the low, the low, the low, the low, 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 low. You see how it's holding? That's what you want to see. When it's running and you know it has a strong direction, these lows don't get broken. So it's a key signature, just like these lower highs don't get broken. On the external side, you want to picture the external side. You want to get chopped up inside there. But this was a very big battle, and just for 200 points. So small range day, and at this point here, I was done. I was like, I'm not letting this rip down and take out liquidity. So still got 20% left, but God knows where this thing is going, man. Very, very sloppy day. And let's go back to a daily chart and finish this video. So I knew that we had some more bullish activity going on because these were all holding, right? And then these wicks, I mean, if you take a look at that, it's super exhausted on the downside, and it would look very awkward for a daily candle to be down here. It would just look awkward. So it obviously we're looking to take out the liquidity above. We have the open of this candle here, which is Thursday the 9th. And then same scenario as this wick. We had the open, we had the middle of the wick, we have the high, and we have that imbalance. And then that imbalance is sitting in a major weak opening gap. So there is a gap right there too that we might hit right here. That's 50% of this wick after we take out this high, if it continues. But these are the next targets right there. So as you know, I'm sure, right? And then after that, we'll probably swing down, you know, something like that. So, all right, you guys take care, and God bless.